What is up, everybody? Welcome to the January 26th live stream. A lot of fun stuff going on in the market today. Hopefully all the technology things are working. Let me know if you can't hear me. I'm checking out my feed on other channels. But yeah, what a day. And for me personally, if you didn't see the news on Smile Direct, they had quite the run-up today. I made a quick video about it around lunchtime, so that may show up in your feed at some point. But I'm going to kick off with that today. And as always, we'll have time for questions. So here's Smile Direct in the past month. And this was one of those stocks that was heavily shorted, 30% plus, I believe. We'll look at that in a second. And I don't know if it got swept into the, break the shorts kind of movement that's going on, but it had a heck of a run. I was fortunate enough to be in there around the 750 range from the pandemic. And now we'll just have to see what happens. Hopefully the momentum continues. Looks like after hours it's down a little bit, but it's always hard to tell after hours. At least from my camp. Also, that was good, not as good, but Rocket seemed to have benefited slightly from that same movement. So I'm a shareholder of Rocket as well. I think a lot of times you guys ask me about Rocket, and I've always, held strong. There's their 1 month chart. They've been in this 19-20 range for several days, almost weeks now, and they got a little pop yesterday too. They're still struggling with that $23 mark, and I've seen it suggested before that $24 is a real milestone from the technicians who follow stocks that way. They suggest that 24 is a core resistance for Rocket Company. So had a couple good wins. We will see what happens in the future. I feel really good about Smile Direct. As I said in the video, right now I'm hanging strong. I thought I'm excited about this. I have to get to over $16 to be 100% gain for my particular holding level. So I'm going to not make any decisions till $16. And then as I mentioned in my video, more than likely, I'm going to try to take the profit but leave the base and hold on to the base for a long time, because I really do believe in Smile Direct. I think they have a lot of positives going for them. And who knows, I might stick with it longer. But that is a good company. So if you got in and you can afford to hold for the long term, at least some of your position, I would, because their growth rate is really spectacular. And if it wasn't for this pandemic, they would have made a lot of progress this year. And they also have earnings coming up. I believe it's in the video, but I think it was around February 23rd. And if you look around at their social media and at some of the user reviews and stuff, it's a qualitative type data, if you will, but it looks positive. It looks like people are getting back in the game. And I imagine with summer vacation and prom dances at high schools, whatever, assuming those things get to happen, that the aligner market will escalate pretty quickly. So I'm going to stop there, and I'm going to answer a couple questions, and we'll talk about Microsoft and AMD. Spoiler alert, they did awesome, right? But I see Raj, he was the first fella here, so I want to say hi to him, Raj, and he liked Smile Direct. And then thoughts on Enphase. That's a good call, Raj, because I bought some Enphase today. Let's take a look at it. You guys know I've been excited about it. It had an awful day. And let's see. 208 at 9:30 in the morning, down to 187. I did not read anything that suggested, let me make this screen a little smaller, that it was a negative for Enphase. As a matter of fact, Enphase added, they bought a company, a small one, right here. They bought Softdesk, and that's supposed to be more of an installer play, the way that I gathered it from just reading the news release. So they did something positive, and their stock went the wrong direction. You can see off, can you guys? I don't think you can see it, but Solar Edge was also down, and so was Sunrun, and I think those were the big ones that were down. But I think for me personally with Enphase, I'm in. I bought more, and if it goes down more, I'm buying more. So hopefully that makes sense. The bright side of what happened today was my cost basis was over $200, and I got it down to it's in the 190s now, so that was positive. And if I can keep it in under 180, if something more happens, I will definitely do it. Their earnings report, February 9th. And I don't know what that's really going to be with a company like this. What's your earnings going to be? But they do have an EPS, so the expectation will be not necessarily that they've made $1 million, but the expectation will be that they are setting higher levels of EPS expectation for the future. So that's how I'm looking at Enphase. I'll do a follow-up video, but I bought today. So hopefully that helps. Raj, and you also asked about NNDM, which I'm not 100% familiar. Nano Dimension. This is one that I'm not familiar with. Let me read real quick. Israeli-based flagship product is a digital manufacturing system. I don't know. Dragonfly and Switch software. So I don't know a lot about it. But it looks like it's been on a hell of a run over the past month. Started January in the $8 range and has essentially doubled. So unfortunately, I wouldn't be able to advise on it. So I'm going to skip off on that one. And okay, so Enphase selling off. Yes, I'm still in. I'm adding. Luckily, I knew, if you saw my original Enphase video, you knew that I didn't like where I bought it at. It just didn't feel right. So I was kind of hoping it would come down, and it did. And I would continue to add, little 10 shares at a time is what I did today. Bought twice, 10 shares at a time. And we'll see if it stabilizes. You would figure that January and February, with pandemic still going on, I can't imagine that installations and sales are like really rocking right now. But, Biden is speaking tomorrow, I believe. Double check that, but I believe Biden is speaking tomorrow on some green energy initiatives. That could unlock the door for a turnaround. We'll see. But if it's flat or if it goes down for a couple days or a couple weeks more, it's fine with me. We already know it can hit 230 when circumstances are right. So as far as I'm concerned, they've set the bar of where it could go in the short term. So I'll take all these opportunities. Let's see. So JP asked about Sabre. Sabre's another one today that took a hit. I did not enter yet. But if it keeps going down, and looks like it's bouncing a little bit after hours, so I'm sort of rooting for this, not to root for things to go down, but you had this high point of 1281-ish. Now you're at 1127. If that thing could get into the $10 range, I would be in for sure. So I still like it. I want to kind of nickel and dime it because it's all based on air travel. Just remember that with Sabre. If you like it too, it's a rebound play. It's not a growth story. It's a rebound play from a long time provider of sort of booking and scheduling software that gets paid out as bookings and reservations are made across the airline industry. So just remember that you need a very strong travel forecast in the airline industry for Sabre to start making money. That day isn't here yet, but I expect that day to be very strong in the summer. So if you can play it smart and just kind of watch it out of the corner of your eye, if you wake up one day and that thing's in the tens, I'd have a hard time passing it up. For almost a swing trade, and for me, a swing trade means that less than a year. So some people think swing trade for them is a week or a day, and that's well within the definition. But for me, it could last as long as a year. And all I wanted to do is get back to where it was pre-pandemic, and then I'd probably get out. That level is about $22. So if we can get out at 10, or excuse me, if we can get in closer to 10 and get out closer to 20, then over the course of a year, then that's 100% gain, and I'm super happy with that, for myself anyway. All right. Chasing down your average. I see end phrase. Okay. Trying to hit a couple questions. We are going to talk Microsoft. I see a couple comments already. Jared asked about, can Sabre's technology be replicated? The answer is yes, and there are competitors. I wish I had this Sabre business case in front of me. Let me see something real quick. Sorry for the delay. Let me see if I can put this on the screen. It's super small print, I realize that. But way down here, Sabre has strategic partnership with Google. They're also in with Expedia. Darn it, they don't really have the list of partners that they work with. Let me check their website real quick. Industry, corporate level buyers. I'm not going to bore you guys with it. Short version is they power Google. They power, I believe it's Expedia. And Expedia has multiple brands, right? So they have all those brands, and then they have 2 or 3 major airlines. So I don't know if it's United Airlines off the top of my head, but a couple names like that. And there's a competitor that does the exact same thing. And they basically split the market 2 or 3 ways. As you can imagine, the Google one is what intrigued me, and the Expedia one. And furthermore, the bull case on Sabre, if I remember correctly, is that they did a lot of work on their software during the pandemic when times were tough, so to speak. And Google is actually partnering with them to take it to the cloud or some bullshit like that. So just read up on it, do your own research, don't take my word for it. But they have a decent bull case, and if you're like me and all you care about is the rebound, then I think that it's a free 100%er over 9 to 12 months. Let's get super granular on when our entry point is and try to maximize the gain. So hopefully that makes sense. All right, what do you think about TSM? Somebody in the comments asked about TSM. One thing to look for, so I want to buy more TSM, but my cost basis is $80. And I've had a couple conversations with folks in the comments, And I want to show you guys one of the things that could work in our favor as far as a price dip is what's going on right here. So there's some tension going on. China's flying airplanes around Taiwan. Guys, I'm not the foremost expert on international tensions, but it's weird. It's weird what's going on. They're flying warplanes into their area. Taiwan has basically fired some warning shots back, and there is concern that China's sort of taking advantage of the transition to Biden's presidency, knowing that he has a lot on his plate, and they're just going to sneak around and put some pressure on Taiwan. Well, you may not know this, but Taiwan is considered a national security risk for the United States. So they protect Taiwan because of their chip, almost exclusively because of their chip manufacturing. So U.S. gets pulled into this somehow, some way. If those tensions get higher, I'm not super worried about a war or anything, but I would figure that TSM would get some like negative press around it, right? That all this stuff's going on, will it affect TSM? So I'm holding out for that kind of dip that, you know, I basically am making that up in my head. But we saw a little weakness today. You went down from 127. You're at 126.65 on, let me get my 1 month here. You're at 134 as recently as Jan 21. Now you're down to 126. We know that in the long term, there's a massive chip backlog in the world. Look up automaker chips or, you know, car chips, something like that. Whatever people are using in their displays, they are actually delaying the production of certain vehicles because they don't have the chips in to roll the vehicles out, right? So whatever powers the computer screen or the navigation, I don't know, you know, what's going on there. But there's a chip shortage, and if you watch AMD, this is a good transition to AMD earnings, AMD has had trouble shipping out enough units for their demand because they have source issues. So the business at TSM, you know, the demand is there. There's no reason to think that this stock will not be a grinder positive for you in the long term. However, you got intentions, you got this demand thing going on. Pick your spots, try to get in for the long term. All right. So that was TSM. LD's here. Hi, LD. Rockets Day. You missed a couple minutes ago. I talked about Rocket. I'm going to do a Rocket video tomorrow. I hope they resume their progress. Bottom line, LD. I read something last night from a technician, you know, technician being a guy on Twitter who stares at charts all day, making the argument that $24 is a tough break for Rocket, and once they got past 24, you know, maybe things go up from there. Interestingly enough, they kind of topped out at 23 today, so we'll see if that holds true. But hey, fingers crossed, we're making moves on Rocket. I'm going to shut up, though, because we need some more wins there. Okay, let's look at AMD real quick. Then I'll do AMD and Microsoft, give you quick 2-second thoughts, and then we'll jump into more questions. Here is AMD. I had it all ready. Net income of $178 billion or $1.45 a share. Expectation of $170 million, so they beat it. And 15 cents a share. Oh, that's last year. Never mind. So 178 billion and $1.45. I can't find what folks were expecting here, but my understanding is that they beat both lines, which is key. So I'm not really super surprised about the 178 billion. I thought beating on the EPS line was good for them because they need to continue to make progress in that front. So really good stuff for AMD. They will be outshined by unbelievable performance by Microsoft. And I like the status of this article, or the way it's set up, much better. $43 billion, guys. In a 3-month period, they made $43 billion versus an expectation of $40 billion. So Microsoft beat by $3 billion what the street had expected. And that $3 billion is only in 1 quarter, and that's more than most companies will make over a 5-year period. And then look at this EPS, $2.03 versus $1.64 expected. That's incredible. As you guys know, that's something that I follow pretty closely from a valuation standpoint. That totally changes their PE ratio. And I'll have to dig in more to make sure it's GAAP and versus non-GAAP and all that stuff. But now you have just seen Microsoft stock get cheaper from a fundamental standpoint. We'll have to see how high it rises on a per share price standpoint. But just great. Cloud business, 1468 versus 1376. Personal computing, plus $2 billion there. So phenomenal day for Microsoft. You'd like to say I'm not surprised, but I have to say that I am surprised at how well it went. Beating your EPS by 39 cents, that's pretty good when the goal is, $1.64 and you add 39 cents to it. So Microsoft is flying high. It'll be interesting. I think that conference call was at 5 o'clock today on my time, Eastern, and it'll be interesting to see what they say. Folks had talked about cloud sales in Q4 potentially being soft across the industry because people had to spend so much stuff up during the pandemic that maybe new sales would be a little light. That is obviously not the case. So congrats to all Microsoft shareholders, which also includes just about anybody with an ETF in the technology sector, because that's how big that company is. All right, let me get a drink and then we'll do some questions here. All right, starting with Gerard, FedEx in your portfolio, it is not. I hope you've been in it for at least 6 or 7 months because I know it recently popped. For portfolio reveal for Lion, yeah, it's pieces parts out there, but I need to set up. I've been watching some other guys on Twitter and stuff, like how they do it. And I am going to make like a Google sheet or something so you guys know what I'm doing and my prices, my targets per share. And so not very often that I sell, to be honest with you. But like Smile Direct, for example, if I woke up tomorrow at $20, I probably would sell at least some of it just to lock that in. So yes, coming at some point. Jeffrey, any thoughts on Beam or other CRISPR stocks? No, I don't. Unfortunately, I put all my faith in ARK for that in my retirement portfolio. Whatever they buy, they know more than I do. SG Blocks from Finks 281. I don't know that one. I don't even know what that is, so you might have to help me. It looks like a stock, NASDAQ. Oh, container-based. I talked about this. Container-based living quarters. Looks like maybe it's an IPO. Not my cup of tea. And it's older than that. It's been on the market since June of 17. IPO'd at right around 95, reached a high of 121. Now you're at 818. A lot of momentum has built here recently. October was a high time. I don't know. I'd have to do a lot of research. I would say on the bright side, you're at $8. So if you read something positive, maybe it's there. It's hard for me because I don't imagine myself living in a shipping container. So it's not my thing. Doesn't mean that that's a bad stock though. Sold me on Sabre in your video. I agree, up by 50%. Yeah, JP, I mean, you might have to be patient, but I just don't see how it doesn't come back, to be honest. It's a rebound play, a lot different than a growth stock. You know, growth stock, you always have to worry, like, is their growth rates, you know, like take Square or AMD, for example. Are they going to continue to grow at a 20% pace, 25% pace? If they don't grow at that pace, the cards come crashing down, and we'll certainly see that out of some of the stocks this year who have run up very, very high. But with Sabre, it's a rebound play, and they already have the network of sales there, right? They just need airplanes to fly again. It's like Boeing. You know, there's a time, I don't know what Boeing did today. I kind of intrigued by Boeing. They're at 202, minus 64 cents. There might be a time if Boeing goes under 200 that I'll just buy a little tiny bit, like $2,000. And just because it's so easy, but it's going to take till 2023 for them to get back to pre-pandemic, which was... Pre-pandemic was 342. They've had some bad news since then with, you know, airplane crashes and stuff. But if you are under 200, I can't imagine you don't make $100 per share on that stock by this time next year. And then you get, I don't know if they're still doing the dividend. Doesn't look like it. Maybe they are. But you get a dividend in that time too. So Sabre, Boeing, rebound. Good companies, they can sell. They already know how to sell. It's just hard times right now. Okay. Benny Square closed exactly on April uptrend, bounce or break. I want to, Square didn't quite dip enough for my interest level today. I did buy 5 shares because I'm new to Square, so I'm trying to manage down a little bit. I'm honestly inclined to say I bet $1 it goes under 200 tomorrow. What does 209 it finished at? Okay, so maybe under 200's pushing it. I heard a rumor that Bitcoin was struggling today. Doesn't look too bad. If Bitcoin goes to like 25,000, now that Square's holding it on their balance sheet, they could go under 200. That'd be a great time to load up on Square. Don't forget with Square, man, growth rates aside, this sucker is not cheap. Now, we all know Cash App, that's the reason I bought in. I like the future. I also like that we've got stimulus coming and tax refunds, which are starting later this year. I believe it's February 12th. And Cash App will be a big part of that because people used it last year to get stimulus and tax refunds, those that don't use a traditional bank. So I love Square, give or take February 12th through whatever, May 1st or something. I think they're going to be rolling. But in the short term, it's running hot. We'll have to see what their earnings say. Looks like anywhere between, oh man, they're not coming out till closer to March 1st. So they might be in a period of inactivity. It's always hard to tell with the stock that's trading that high. All right, JP, good value in a stock market that is hard to find. Yep. What do you think for real estate for this year? I mentioned when I talk about Rocket that I think the real estate crash is wildly overblown, and I'm expecting a good year in real estate. I go search new home demand, and across the country, it's unbelievable how low the supply is. The only thing that you don't want to confuse yourself on is if you see, moving out of California, moving out of New York, you could see those headlines for obvious reasons with the taxes and whatnot. And don't confuse that with the rest of the world, man. There's so many houses. I live in Ohio, right? It's freaking Ohio. And there's not a lot of houses to be had at good prices in Ohio. And Ohio's just like everybody else around here. It's just like Tennessee, Kentucky, Michigan, Nebraska, you name it. This is where the world really lives. And I know Florida, Texas, those are all hot. So I like real estate this year. As far as REITs go, I'm not in a lot of REITs. I'm in one, and it's in my retirement account, and I forget what it's called. But I think you try to stay close to residential if you're going REITs. I would worry very much about a retail REIT, such as Outlet Mall and whatnot. I think LD talks about American Tower time here and there on comments. I think American Tower is cell phone towers. That makes sense to me, and they were recently down. So there's a game to be had potentially there. But real estate in general, I think it's good. Do you think GameStop is a buy? Okay, pass. Etsy to buy. Etsy down, inching. That's the one that's inching under 200. Let's see where it's finishing. 204. The high was in the 230s, I believe. You've got, high was 220. You've got earnings at the end of February between the 24th and the 1st. I think fourth quarter's strong. I think they're playing coy. I thought today would be better because Elon did some Etsy tweet, whatever, that he likes to shop there. I think Etsy is a buy for the long term. I think that for me personally, I will add more shares to Etsy, and I am looking for a weekday. I'm looking for a day when it comes down. Today was, today was 224 down to 204. So that's a pretty good weekday, but I want to see what happens tomorrow, right? Because if we're going to take another hit to the head, maybe it goes under 200, just like Square. And this is the game that I play, and I know not everybody agrees, because if you're playing long term, there's a lot of people that argue with me about just buy it and wait long term, but I like to try to get in low because it makes such a big difference on when you get out. So let's just say the landscape for Etsy changes in 9 to 12 months. I don't want to be trapped because I bought at the high. I don't think Etsy's going down remarkably, but if it is trading at a high valuation, which it is, let's say the price drops 10 or 15%. Then if I bought it on a down day, I'm probably pretty close to that. And I may not lose even a single dollar. But if I just blindly go in and buy it every time it's on the news, then I'm going to be at the high end of that. I'm never going to make any money and position myself for an easy escape. So that's how I look at things. But overall, yes, Etsy's a buy. Pick your spot. Chinese stocks fluctuate so much. Long Alibaba. I don't buy Chinese stocks, but I do agree that Alibaba seems like an opportunity, but it's not something I buy. JP's bullish on Rocket. Welcome to the party. Jared says Uber selling off. I am a fan of Uber, not at $50, and I really wish I would have bought it during the pandemic, and I've read too many negative articles and got freaked out. I think long-term Uber is good. Their debt level is pretty big. That's why I think you got to manage your cost basis. So 53, there's no way I buy it. If I go to the 6-month chart, and somewhere in October, it went from $35 to $48, and it's been up since then. Sure would be nice to catch it, another 10 or 15%, and then you have to hold for a long time. I don't think Uber's going away, and I think they were smart to consolidate their company and get rid of some of their bigger bets, like driverless cars and whatever, and just focus on the transportation and the Uber Eats. And then obviously you've got the catch of, when does the world come back to normal? I'm going back on their chart to July of 2019, okay? You sort of figure the world was normal, whatever, back then. You're at $46 in July of 2019. Today you're at 52. All they did was add debt. So I don't like this. I don't like 50 something. I think you take your chances. Earnings date, February 10th. I think you take your chances that they didn't make as much money as they were projected to, and hope you can steal a couple bucks off there. JP seems like VNQ. He's asking about VNQ ETF. I do have a few Vanguards. I don't have them memorized, so that's a problem for me. It is the REIT. I'm trying to see if it's the REIT that I have, though. And I'll know because it should have Digital Realty Trust in it. This one does. So sorry for a weird answer. It also has American Tower. This is likely the REIT that I have in my retirement account, VNQ. It sounds right. I just don't have that name memorized. And if it is, the number one reason I bought it is because most REITs do not have Digital Realty Trust. I'll show you this. If I bought a REIT, darn it. I have to move up the little screen thing. Hold on. Right here. DLR. That's, if I bought a REIT standalone, this would be the one I'd buy because they house data centers. And it's a really fascinating company. I don't know how it's trading. 1 month. Okay, this is funny. Probably missed a couple bucks on this one by not buying it, but here's this. Let's go 1 year. Here's where we're at. 1 year, let's go pre-pandemic, which is hard to do. Pre-pandemic's right here, so 132. Lots of ebbs and flows. It looks like it has dipped, but don't forget that's 3% dividend on today's price. So not only is it, basically climbing, here's 5-year chart, but I can't imagine that sector, for a REIT, that's a growing sector. And that's the problem with shopping malls and stuff. It's just like, that's not growing. So you have to be careful. But I believe that the need for data center warehousing is not is growing, and it's not going to go away. And those things take up so much space that I like that one for the long term. So good call on VNQ. That probably is mine. Anyway. Elizabeth, what are your thoughts on Apple stock keeping the momentum for the next 10 years? You know, that's going to be an interesting earnings. Everyone thinks that it's the $1 billion quarter, right? Which is absolutely unbelievable. The growth range will be slower, but I think the chip play, the M1 chip play, and potentially expanding to graphics chips as well, is going to be their next sort of moonshot. And I don't necessarily know if revenues keep growing at 10 to 20%, but I do think their EPS grows from there. Hold on for a second. So what you're probably going to see one day, and you're talking about 10 years. So 10 years from now, I imagine that Google, Apple, and Amazon will probably be great dividend stocks, right? Because they will have reached a point where, you know, I'm not sure how much growth is certainly not double-digit growth, but their profits are going to be insane, and so it'll be a dividend at that point. And so that's what I'd say on Apple. I would never bet against Apple, but for 10 years, if you want that growth for 10 years, you may not see it. The chip play, though, is going to bring in just a tighter grasp on their little, you know, they call it the four-wall garden or whatever that they have, and that is where I think stuff starts to pay off big time. Oops, lost my place. JP is looking for Boeing under 175. I would definitely be interested there. Appreciate your review with Nike. Pulled back a few days. I did not. Oh, by the way, you got a message of an initial live video that didn't connect. I'm so sorry about that. Every time I sit down to my computer and go to set up the live stream, YouTube wants to make me live like immediately. And I'm just trying to turn stuff on. So it's like, boom, you're live. And I'm like, shit, I don't want that. I want 15 minutes to turn stuff on. So I always, for the past 3 or 4 live streams, I've had to delete whatever they've built for me and then redo it. So if you guys ever see that, I will never go live and not show up. But what has happened for 3 strikes in a row is that they turn me on immediately and I have to delete that one and set up a new one. So I'm very sorry. It's obviously my fault, but I haven't figured it out yet. Nike, you know, put it on the same plane as Apple. I don't see how it ever disappears. And it is such an unbelievable, you know, monster machine. Now, it has run up a lot here since the pandemic. P ratio at 76. I hate to argue with it too much. It's it's got the dividends. Let's check out the earnings. You can't see it very well in the corner of your screen, but they've hit the last 2. They obviously missed Q1 and Q2. That doesn't surprise me. But the catch with Nike, the net, and a lot of retailers, their next big thing is direct, right? And they've always had Nike.com, but what they saw in the pandemic, like a lot of people, so whether it's the people who make designer purses and shoes and whatever, is folks skipping Nordstrom, skipping Macy's, and just ordering from Nike.com. And what that does, obviously, is allow Nike to make more money on every pair of shoes that they send. So I think with Nike, the future's still bright. Do they keep that direct-to-consumer line growing? That'll be the key. I don't see why they wouldn't, and I would never bet against them. I think the more intriguing play just for fun is probably digging into Adidas. You know, so Nike's on the top of the mountain, which is a good place to be. Hold it long, you should be fine. The way my brain works is, you know, I'd be thinking about what is the opportunity for Adidas. Under Armour's a dog, but it has been a dog for like 3 or 4 years. Have they fixed anything? I don't know. I don't follow that stock. But as soon as you hear Under Armour doing something positive, because they've been nothing but negative forever, you know, let your ears perk up a little and look at it, because there's Nike with everything, right? It's like Starbucks. So Starbucks was selling all the coffee. All you want to do is sell 20% of the coffee that Nike sells, just as a stupid example. So that's where I think Adidas, Under Armour, there's probably like a New Balance or those kind of companies. I think that they can probably offer you more gains, but set it and forget it. I don't know. Nike feels pretty good. I'm looking at their projected growth rates, which is, let me see if I can pull it up. It's actually pretty surprising. You know, these are projected, so who knows. Current year, 88%. Next year, 28%. Next 5 years per year, on average, 35%. That's a lot better than I would have guessed for somebody who's so big. That's what makes Microsoft earnings this quarter so awesome. It's hard to move a $1 billion ship, right? Everybody, you know, the argument for like MasterCard versus Visa, right, is MasterCard makes less revenue. So every time they unlock a channel, they technically grow at a higher percentage than Visa. So people want to be a MasterCard technically. Same with Microsoft. They kind of want to look at the AMDs or the other people in that game because they can make growth more quickly on a percentage basis. But Microsoft, and now if this holds true for Nike, man, that's some impressive growth for a just titanic of a company. It's really hard to bring that down. So without studying Nike, you know, you got my feedback, and look at other people. Is Nike selling, are they growing that way because they are putting other competitors further down the line? Or is it the entire market for shoes is growing? If the entire market for shoes is growing and you notice that Adidas has a similar type growth rate, they may be the better play just because they're smaller and it'll look sexier when they comp, you know, plus 50%. So that was a long-winded answer. Pitney Bowes up 80% today. Scratching my head on the reason why. Holy cow. A good question. I would not sure I know the answer. There's actually an article, funny enough, right up your alley. Why Pitney Bowes just rocketed 52%. This was written on Tuesday, January 26th. But that's what happened. Fourth quarter numbers in 1 week. On the SEC's website, BlackRock just made a filing showing that it's taken a 14% stake in Pitney Bowes stock. So BlackRock bought a lot of it. You know, 14%, that's pretty good. So that's probably why. And that's an old school stock that obviously, you know, their best days, I would guess, are behind them. But a lot of these companies are reinventing certain things. I'm trying to scroll down and look. See if they're doing anything really sexy here. It's hard to tell on just headlines. Yeah, I don't know. But you'd have to dig in deep. I think that there's one where the growth rate is going to be hard to come by unless you reinvent yourself. What they're showing for, on Yahoo anyway, is current year What's their fiscal year? They're in 2020. Projection had them down minus 61% when they finally do report. Next year up 50, but if that's, if you lost 60% in the pandemic and next year you're up 50%, you're still losing business, right? And then next 5 years, a negative 26% run. Doesn't look super promising, but what a lot of companies like this can do to make their stock continue to grow up is actually cut staff, cut costs, turn into a profit machine. And so it doesn't mean the stock goes away forever. It just means that they do different things. They don't have the latest greatest invention, so they are going to be super efficient at what they do. I don't know enough about Pitney Bowes to say, if that's what they're going to do, but Shopify down. Shopify's they've got an interesting year ahead of them. That's one, without looking at them, that it'll be an interesting comp year, right? Because everybody had to make a website to sell their freaking t-shirts and whatnot. So I'm not surprised that Shopify did well in the pandemic. And the good news is they make money per transaction. However, does the sales flow, does it negative comp this year? I have no idea. I mean, you can argue that e-commerce has changed forever, and I don't disagree with that. But the demand level from, oh shit, the world's locked down, I need a website, to, hey, it's a sunny day and I can either go to the beach now that the pandemic's gone, or I can build a website, the demand level goes down. I think Shopify has defied odds, certainly defied what I thought it could do. But I'll be wondering if they negative comp this year, just to be brutally honest. And I think they're still a good company and they have some things going for them, but it's not as peak of a season, I would imagine, for their game. Anyway, Amazon isn't a slam dunk. No, there isn't. So I am playing, I'm not going to buy a lot of Amazon. If I'd be super happy with 3 or 4 shares. The first one I bought was 3,300, something like that. And that's right at the level that it's playing at. I'm really hoping that I can sneak in maybe 3,150, 3,100, and then, I'll probably just buy and that's it for my Amazon days. It'll just sit there. I said before that my target for it is $3,800 to $4,000 before the end of 2021. So that's just a 1-year return. To your point, sorry, who's this? Derek. I don't see how it's not a slam dunk. I mean, they would have to try to screw it up. Bought more Square at $215. This is Ivan, but my cost base is only at $104. Heck yeah, you're doing great. I'm super late to the party. And if you don't know the story, I was bearish on Square for a long time. I didn't like the way they ran their Bitcoin financials. I didn't like the pandemic with the card readers. I thought they were in for a struggle. I really did, and I made a couple videos about it. And I woke up this year, and after tallying my results, I ended up last year plus 39% across my portfolio, not including dividends, which were meager. And I was kind of disappointed just because we know that there were some huge run names. I'm happy with plus 39, but I felt like I could do better, and I felt like some things that I wasn't as open to, right? Square was one of them, and I kind of, looked in the mirror and said, how is a guy who loves Visa and PayPal, so anti-Square, and you love Venmo and the direction it's going? So finally, I just made myself buy in that 215 mark, and I will be adding more. And at the end of the day, I'm a fintech believer. So, but I had to be serious with myself. It's almost like, what are you doing? Why do you have PayPal and Visa and at least not some Square? So that's my quick Square sob story. And the other one that I made myself buy was Enphase. So traditionally, I'm not anti on renewable energy at all. I'm anti on the business of renewable energy for a long time. Just thinking that the days of it being wildly efficient are probably a couple years away. But I've always been intrigued by solar. I've always passed it off as too expensive. And then this year I'm like, you gotta think differently. So I chose Enphase, and all the reasons why are on a video I made, 3 or 4 weeks ago. And I'm probably dragging the stock down because I paid in the 210s, and now I'm trying to lower my cost basis with days like today, which I'm happy to do, and I'm excited for Enphase. But I'm just sharing with you guys like how I'm trying to get better as an investor, and just take some of the crowd signals, right? That there's something to this stock instead of just basing it purely on fundamentals. Very unlikely that I will invest in unprofitable companies at any sort of scale, but Square and Enphase are not unprofitable. Those companies both have EPS and PE, and I can at least ground myself in some basic knowledge and some basic valuations. So that's one of the reasons that I chose them. Etsy, kind of same thing, but just sharing that, I guess. Chamath borrowed from me for his trade. Oh yeah. Derek's in Cincinnati, so send me a note. My email is, I think it's on my about page or whatever. Send me an email. Maybe there's a time when the world is normal that we can meet up for a beer or something. Hello, watching from the Philippines. Welcome to the channel. Airbnb is doing well for me at 133. I like Airbnb. I'm out of room for unprofitable companies, but I would not be surprised if that thing crushed it. And I don't think it's a bad play at all. And maybe I'll jump in eventually. I'm not super big. I think travel is the demand for travel stocks right now making a rebound is higher than I think it should be, put it that way. So like Expedia at 135. Dude, I'd get in an Expedia today for maybe around $99. It's probably never happened though. And they've got loads of debt, and so does every other hotel chain. For me, travel ran up too fast. Airlines, are you kidding me? What's going on in airlines? It's not, it's too early, in my opinion. Cruise lines, same thing. It's too early. Wait and show me the tickets. And that's maybe why I like Sabre a little bit to dip back in that world, because they haven't run up past the point that they were trading at before the pandemic, and that just is stupid to me. Airbnb, different game though. IPO'd after the pandemic had gotten going, so I'll be watching them. I think it's a good company concept, and we'll see if they can grow and mature. Buying and holding Ajax SPAC. Founders of Instagram. I don't know that one. I'll have to take a look at it. Lottery ticket. Hey, but I like how you said that. If you can go in that way, then you're going to be fine. It's the people that spend their last $100 of investing on a SPAC and they need it to return 30% this year. Those are the folks that are going to get their butt kicked. Like everybody who jumped on GameStop train late just because it was on TV, because they thought they could double their money, and then what they really needed to do was make their car payment, right? And that's where I worry about some traders. But if you bought it and you're like, hey, there's risk, just like Airbnb. If you bought it and you're like, there's risk here, but I'm in for 5 years, I don't want that money. I believe it'll do well, but I know I'm not expecting anything this year, then you'll be fine. You're buying it the way you're supposed to. What do you think about ETOS? No idea, but I will look it up. Atosa Therapeutics, basically a penny stock here at 261. So unfortunately, I'm going to have to pass. It's just not, that's just not a game I play. But best of luck. And but you're not going to ever get too much out of me in penny stock land, and you almost certainly are not going to get anything out of me that'll help make you money. So I apologize. My ETF list for retirement, I'm super huge on QQQ, which is NASDAQ Top 100. People are probably tired of hearing about it on the channel. Love QQQ. ARKK, IYC, which is consumer discretionary. Love IYC. That Vanguard REIT, VGN. I can't really pull it up because I'd have to log into my account and shit. There is, so I said IYC, QQQ, ARKK. There is a Vanguard consumer that I don't like nearly as much as IYC, but I have some. Believe it is VCR. Let me just double check the holdings. Yeah, VCR. And then go back in the comments to the dividend stock. Somebody mentions VQN. I think that's what it was, which is my dividend one. And that's about it. It's not VQN, and now I forget what it is. Sorry. But to be honest with you, like regardless of what the other like ones are, I'm banking a lot. 60% of what I'm banking on in retirement is QQQ, ARKK, and IYC. I have a dividend ETF from Vanguard that's all dividend stocks like Johnson & Johnson, stuff like that. But those are like 10%, 8%, something like that. I'm going with growth, so hopefully that gives you like some idea of how I set it up. No bonds. Actually, I have a stupid bond thing that when I transferred from my old financial advisor from years ago, you couldn't sell this particular bond. You'd be stupid to sell it until it matures at some oddball time. So that's just sitting there. But I'm not actively in any sort of treasuries or bonds. I have very little interest in them. And now that I am controlling my own IRA, I feel pretty good that I can buy, sell, do whatever as needed, if needed, during volatile times. But mostly I'm just trying to add. Okay, lottery ticket. There's Andy, Mr. Kang. I know very much about Uber. They made a lot of money. Then what we know, people might think Uber is cheap. It's a cheap ride, but the company made lots of money from the driver. Okay. Everyone in Miami used Uber and Uber Eats, millions of drivers. The stock should not be cheaper than Airbnb. So Andy is bullish on it. Claiming basically that, the company's making a ton of money, that employees are not. That, I think, is an issue that Uber is going to battle with for a while. So we'll have to see where it goes. And keep in mind that they have a ton of debt, too, so it's not a risk-free proposition. I think that, they're always going to get funding. So I don't think they go necessarily bankrupt, but they can't handle another pandemic or anything like it. So, keep your eyes on it. Look for a buying opportunity. What do I think about Overstock? Tip ranks has it high. Overstock. So I already know that before I bought Etsy, I did some comparisons to Overstock, just to kind of get a feel for e-commerce operations, just comparing it between the two. And Overstock's growth is it their growth or their margin? Now, their growth looks solid. It's definitely a high growth company. Let me look at something real quick. So this is what is weird, dude. Profit margin and operating margin, not even 1%. And to be fair, I have not dug into it. That could be a pandemic thing, AKA it costs a lot of money. Am I showing you guys that? There it is. Profit margin and operating margin. Now this could be because of higher shipping costs, pandemic related costs like PPE, all that crap, but that sucks, to be honest with you. And they do have that Bitcoin trading platform. I don't know that I would buy it for that. It'd be like buying Square solely because of Bitcoin, and I just don't see the rationale there. So it's not one for me. To be fair, the growth rate that I was mentioning is down here. You know, across 5 years, they're saying 100% per year. That sounds a little crazy. But here's what you got. Current year up triple digits. Next year, AKA people can go shop at stores or make other decisions without a lockdown. So you're going to negative comp. If I was an overstock investor, or if I was interested, I would wait at least for those negative comps to come in, try to get it at a discount. So that's a quick peek, my 2 cents anyway. Know that with any company that I talk about like Overstock that I don't own, then the level of research is not as intense as I put into other things. So just be careful there. There might be an underlying story that's worth having. I do think it's like highly shorted. So you might get lucky there. I'm checking it for you. Here's our short, by the way. I guess I'll just show you guys. I said this last time. This site is called, the way the screen's set up, I can't show you. Give me 1 second to fix it. This site from 1982, highshortinterest.com, free site, whatever. Does a good job, updates a couple times a month. I thought Overstock was on here. There's Rocket. SDC is on here. So if Overstock was on here, which I don't see it, this is the next page. Okay, I don't see it on here, but what I was going to say that ended up not being a thing was that perhaps Overstock is in this, break the shorts movement as well. That's what I think happened with SDC and Rocket. Okay, GME to the moon, yes. I did see some mention of reinventing. So potentially, I'm not sure what Chess Dad was, which stock he was mentioned because I'm behind. You guys are posting faster than I answer, so. Thoughts on CRM Salesforce. I covered this one last time. I like it. But you should know that I think next year, from the projections I went over on the last live stream, it looks like next year is a negative comp, certainly on an EPS level. And I believe, without doing enough research, I believe that is because of the Slack and the other company they bought, which I can't remember. I believe the costs associated with those acquisitions is going to hurt EPS significantly. And so, there's a little bit of tentativeness, if you will. And so you could have a down year, or you could have like a flat year. Doesn't mean it's bad. I think that for the long term, it's great. But just know that 2021, I guess my point is in 2021, you will likely be able to pick your spots. Their next earnings is that same week of February 23rd. There's no way they come out and say, at least in my opinion, there's no way they come out and say Slack made a zillion dollars, right? I can't imagine. So assuming that doesn't happen, then you should probably be able to pick your spots and save a couple bucks, is how I would approach it. Any interest in 3D printing? No, mostly because I don't understand it. I mean, I understand it, but I don't understand what would make one company better than another. And then I also know that ARK is big there. So if a 3D company takes over the world, it'll make its way into my ARK fund. And that's about all I can do in that particular instance. GameStop to the moon, why not? Any thoughts on Twilio and Square pullback? I almost bought Twilio. Square I covered earlier. I am sort of excited at the potential of getting Square for under 200. I don't know if that'll happen, but I think we've got 2 or 3 weeks before earnings, and we've got 2 or 3 weeks before tax refunds and stimulus checks actually hit the Cash App. So take advantage for Square over the next couple weeks is what I would say. And if you see any weakness in your long-term shareholder, I would jump on it. That's what I'm going to do, and keep my cost basis down and then let it ride into the future from there. Twilio is a really cool company that I like a lot. I was looking at this one around December. So Twilio does a lot for businesses with messaging platforms, customer service, text notifications, super cool company, seemingly with a lot of opportunity in the future. You can see what they've done this year alone. They are not profitable yet, so no EPS. And then here's where I started to kind of pause. Year ago, 2019, they made 16 cents a share. Then they made 12 cents a share. This year goes down to, sorry, that blue. Oh, stop it. This year projected to go down to 6 cents a share. You know, that may not happen. You got a high estimate of 37. But there's a disconnect somewhere that I didn't have time to look into. There's a disconnect somewhere between going from 1.3 billion to 1.67 to 2.2, and yet having this EPS issue. So it's not profitable right now. It was last year. I just don't know what's going on. But from a technology standpoint, I do like what they have, and just do as much research as you can. There might be a time when I jump in them. I would need some more weakness for me to break out the books and really study it. Today you were at 377 and you dropped to 355 over the past 30 days. Yeah, I don't know that today's dip is anything. And I'll show you. I mean, here's your 1 month. So you're already up. I mean, you're flat for the month, basically. I wouldn't say it's a huge dip. And at one point, you got to 394. So I would consider, let's see, 6 months. If you wanted to talk to me about dips, you'd probably have to be here, 329, or this would be even better. Thanksgiving, 300, 292. Then you're starting to say, well, hold on for a second. Is this a special situation to get in? So, my opinion, anyhow. Oopsie, I reset my thing. And thank you for the super chat, Piyush. I hope I say your name right. Thank you very much. Thoughts on Utz? Is that the pretzel company? I think it is. I love those pretzels. I don't know. It's consumer packaged goods. I don't know a ton about it. But they make really good pretzels. And they're up. Oh, did they just IPO? Let's see. No, they didn't. They are up in the last 6 months. They went from August at $13 to $23. Does a pretzel company deserve to do that? I don't know. But good pretzels, so you got the product part right. Unfortunately, I don't know about the business enough to say. Between Microsoft, Facebook, and Apple, which ones do you think greater return? I think that one, a lot of people would say own them all. I personally, because I don't use Apple products, even though I've probably gave them $2,000 or $3,000 between the rest of my family last year. I would split. Actually, I would go 60% Microsoft, 40% Facebook. That would be me. But I think there's a million people in America that would do 50-50 Microsoft and Apple and be perfectly happy with that. So I would take the added risk of Facebook because the price on it is down and the growth rate is there. Out of those three, Facebook is the riskiest for obvious reasons with politics and Democrats and all the stuff going on. So, but if you're just saying like bet $1 and give me the most for my money, I'm 60% Microsoft, 40% Facebook. Chested, I have a moderate amount of Square, slowly adding more. Also have Arc FinTech, which is a great way to play. So you and I think we've had this on a couple of comments because you have an easy name to remember. I think we have a couple stocks like this that we're doing. I'm with you on Square, slowly adding more. Let's hope that selfishly, let's hope we get under 200. I think that's a great spot to be in for the long term. Short ratio. I can tell you how I understand it, but please, there's so many people who do shorts and options better than me. Don't run and tell your friends that I told you this. But so what you're looking at in the short ratio is basically the percentage, and all this stuff is free on Yahoo. So let me just do a quick transition. So here we are at Utz Brands, the pretzel company, and we go to statistics. These statistics are updated twice a month on the 31st and the 1st. So you see Yahoo's actually behind, or I said 31st and 1st. I meant to say the 31st and the 15th. Yahoo is behind. There should be a January 15th data posted in here already. But you can see on Utz Brands, you want short percentage of float because this is the number of shares that are out in sort of like the free market. Okay, there's this right here, held by institutions and insiders. That represents, held by insiders represents a portion of shares that you and I cannot get even if we wanted it to. So we only care about the short percentage of the shares that are available in the world to an average Joe like me, basically. So Utz is 5%. It's hard for me. I don't know enough about them. You know, that's not alarming, I don't think, at 5%. But if you start getting into 10s and certainly 20s, and then the highs are 30s, if you're in that neighborhood, now you have to say, well, why are so many people betting against the company? That's all. And it could mean that they're all wrong. And in that case, you just carry and hold, sometimes for years before they give up. But what happens when there's a 30% kind of short percentage, everybody who sees that is thinking the same thing as I said, which is what do they think is going to happen? You know, why is this shorted so high? So the Reddit GameStop is not common because that had reached a place where they were 100%. They were more short through a complicated exercise. They were actually shorted more than the number of shares that they had in the float. Okay, so not very common. I was going to show it to you, but that high short interest site is down right now. So GameStop got up to like 100+%, which is basically unheard of, right? So I was bitching about Smile Direct at 30-something%. That's pretty high, but it's nowhere near what GameStop was. And then you have the Reddit forum coming, selling themselves on an obscure series of events that would make GameStop a relevant player again. And so for, basically for fun, they just threw it in and went after an oddball position and back and forth, and they're winning. And so it's entertaining. It's not my game, but that gives you an idea. Like you should always look at the short percentage for every stock you own, because if it does get to 30%, and like SDC or Rocket, you have to dig in again and say, well, is there something I'm missing, right? Is there a lawsuit? Are customers saying things that are bad? I did that exercise with Rocket and SDC, and I saw nothing. So that's how I go about it. Okay, guys, I have just a couple minutes left, so I am going to scroll down here. Try to pick a good one. Gonna skip GME. Talked about short floats. Visa okay for 2021, absolutely. You'll find out this week. I don't want to put any more money in Visa because I have a lot. It's my number one holding, and obviously 2021 is going to be a mixed year. But if I was new to Visa and I was seeking for positive investments, if you see Visa go under $200 and you're willing to hold through at least 2022 fiscal year, I think it's a very intriguing investment. So I'll leave it at that. I'm not going to say it's the best one in the stock market, but if you combine risk with reward, I think it sits right there. Trying to look for another one that's good. Utz was an IPO, okay. Oh, so Chestab makes a good point. If stock market is this crazy with folks getting $600 stimulus, what will happen when they get $1,400? That is going to be wild, especially if it doesn't land till like May 1st and the weather's nice at places like Cincinnati. The world is going to go crazy. What do I think about the Indian stock market? I don't have any exposure. I assume that your population is growing as fast as, I'm assuming you're in top 5 population growth. I wish I knew more names that I could study. It's too bad that China's market, every Chinese internet stock that comes out, people are digging and done a lot of research for it. I haven't seen that with India. There's a play going on right now in Africa with Jumia, if I said that correctly, which is intriguing by itself. Mercado Libre, that's another one. I would like to learn more about the Indian stock market. I am very, very cautious with international stocks. Taiwan Semiconductor is a stretch for me, and that's just me, and that's just my little tinfoil hat that I don't always trust that accounting principles are the same. I know what I understand in America. I'm not the smartest guy in the world, so I have to stick with what I feel good about, and I understand accounting in America. So that's why I'm always like triple cautious on investing internationally. I'd be much more likely to do a foreign e-commerce ETF of some kind, right? That would be more intriguing to me than buying an individual company. All right, guys, I think that is it for today. I hope you enjoyed it. Take a look at those Microsoft earnings. Don't forget that there's two sides of it, right? There's the quick report that comes out that says AMD made, $6 a share, Microsoft, whatever. That's just a basic headline. Get in there if you're interested in those companies and read the conference call. It may take a couple hours for them to post the transcript. That's what you want to read, because that's where you're going to hear Lisa Sue say something about, you know, we're way behind on production because we're not getting enough supplies, right? So, or we noticed that this GPU segment is blowing off the charts. That's where you want to be, is in that transcript, and then go to their investor relations page. In some cases, it may be tomorrow or another day before they post it, but they should have some like PowerPoint presentation that you, so keep that in mind. And thanks everybody for coming. I hope you enjoyed this, and we'll see you on the next video.